Dimitri Speck. He's the founder and head analyst at SeasonX, and he's been a professional in the field of pattern recognition and the development of trading systems for a long time. Back 20 years ago, he founded SeasonX, and he used it for for managing funds and doing work in the various markets. He won some great awards with the UCITS Hedge Fund Awards, and he's been doing this for more than 20 years. So I welcome you all the way from Germany. How are you?
Thank you first for having me. I'm fine, and I hope you and all listeners are fine as well.
All right, great. So this is fascinating stuff because, we look at the markets, and if you look at it on a very close basis, minute by minute, right? So, what's happening? What are the reasons? But you kind of take a different approach. You look at it from much afar, and you're looking at seasonality. So first I thought we'd go into the discussion and ask you is, what is seasonality in your opinion?
What I'm specialized in is everything regarding statistics, not only seasonality. But seasonality, of course, is one core topic. Seasonality is simply a cycle depending on calendar, mainly 1 year. But we have also regular cycles, for instance, 1 month, intraday, and other cycles, also the 4-year election cycle, for instance. Mm-hmm. And there are some patterns which are useful for tradings and for investing, and this is what I'm searching for.
So I guess you use a lot of computer compiling to find these, right?
Yes, this is one core stuff, of course. I founded also a company called SeasonX, which gives Bloomberg and Thomson Reuters the possibility to make use of the statistics and make their own statistics very quick. But generally, we are talking about coding and statistics here.
Right. So in terms of seasonality, it's interesting because you mentioned that you look at not only big patterns over time periods like 4-year election cycles, but also intraday. And one of the things I noticed, I think I read a piece yesterday that was talking about the intraday seasonality, if there's such a way to describe it as that looks at like the first hour and the last hour as the time that there is some greater trading opportunities on one side or the other. Have you found that as well?
I'm looking more, to be honest, on at which time of the day is the best time to buy and the best time to sell, and also when is the best time to be invested. Interesting, some of these intraday patterns are quite stable in the long run, despite there are so many computers nowadays. So you can really wonder how it can be that, for instance, overnight you make a bigger earning in the S&P than during day, and why this pattern keeps over more than 10 years now. Yeah. So, yeah.
And the machines then pick them up and then it could possibly exaggerate them, I guess, right?
No, it should be very different. As more people are trading a pattern, of course, it should disappear. We are not talking about trend following, where this is correct, what you just said, but about a pattern that is regular. And, of course, there is no free lunch in the market in the sense that if there is a statistical anomaly like an intraday pattern, then it would disappear. Let's say if in the Nikkei or in the Japanese stock market, all trades are cheaper after the lunch break, Mm-hmm. And of course, if everybody places then his order after the lunch break, this pattern would disappear.
Right.
Yeah?
Yep.
And interesting enough, it does not happen. Yeah. So there are not many people around who are trading these patterns, and this gives us a good future in the regard that also in the future we can make benefit out of it.
So explain the concept, because I think you're touching upon this on the issue of correlation versus causation. And how do you distinguish between the two when you're looking for ideas?
First, of course, I'm looking whether there is something. Yeah, for instance, the year-end rally, and only if I find something, I make some thoughts whether there is a good reason for it. Yeah, mm-hmm. And sometimes you find these reasons. Yeah, sometimes, for instance, window dressing or tax issues or emotions. Yeah, right. Talking about the Christmas rally, we have good emotions at that times. We are buying presents, and so we are also buying stocks to keep it simple. Yeah, and sometimes we don't find the reasons, but they are still existing. This is, of course, a big issue which you cannot discuss endlessly.
Right. No, it's interesting because that is something to be said, that when, that Christmas is Santa Claus rally and how the concept is that it's end of year. There's a lot of other things going on there too that collide, I assume, with end of year and there is some window dressing and there is you feeling better, and all those things probably do collide. But I guess when you look at all the different things that you've uncovered over the years, what are some of the best tradable ideas that you've kind of found and generated and actually worked?
Yeah, the Christmas rally is in the long run of the most stable stock market pattern. Yeah, it exists for many decades now. That does not mean that it's every year, but it's really quite long. Another is this very simple sell in May and go away. This exists also internationally, despite it's a very simple approach. And what I'm focusing on is, of course, more sophisticated patterns, for instance, in specific stocks or in other instruments, just to have a bigger selection for seasonality. Because even if the Christmas rally is one of the best statistical seasonal patterns that are existing, it does not help me to be 10 days in the year long, where I'm investing the other 240 days. Yeah, so, yeah.
So it's interesting
I need
because
a lot of patterns.
Right, there's a lot of patterns. You found one that I find just, it's fascinating, because we hear about some of these things like the Santa Claus rally, which starts, when does that actually start? What is the date?
It starts in the mid of December. Yeah,
right.
14th of December, something, depending on which market you are looking. And it ends in the first days of January. So it's a very short pattern, but exists since decades.
And sell in May and go away, we'll say it starts in May, but when does that end?
Sell in May and go away, to be honest, in a bull market like we had in recent years, selling on the 1st of May is usually a little bit, too early. Mm-hmm. Yeah, we find higher highs a little bit later. For instance, in the S&P over the last 30 years, the top was at the end of July. But nevertheless, between 1st of May and end of July, the rise was not very strong on average. And the low, which is in October, is still below the 1st of May.
Right.
So in the long run, you did outperform the market if you were, or only the period, the winter half year was good for investors.
So, but some of the other ones that you found I thought were fascinating. One of the ones that you wrote about, you talked about recently, was the World Cup and the Russian stock market. I mean, it's kind of like, I guess you could put in, Olympics maybe, but here's the thing. I mean, international events really impact markets that greatly. What did you find here? Because this is pretty cool.
Yeah, I'm searching not only on cycles to mention this, but also on event studies. That means events which are coming regularly, but not at the same every year at the same time. And one of these events are sport events like Olympics and the Soccer World Cup, and they are coming every second year finally both together. And here I have figured out already years ago that we have a quite stable, I would say, pattern, that the specific stock market where this sport event takes place, and now it's Russia, that it usually starts rising about 9 months ahead of the sport event until about 1 month for the beginning of the sport event. This is the average, of course. This year we have a different situation because we have this political influence which caused this Russian stock market to drop some days ago. Yeah, but this is a general tendency that stock markets in the country where the sport event takes place are rising already months ahead of the sport events and stop rising about 1 month. So when people are looking at the sport event, it's already too late. And one thing I would like to say here, this is what many people don't consider. Many events that are influencing the stock market, that's not only some sport event, but also, let's say, FOMC meeting, when the Fed meets, they are looking at the outcome of the event or at the event itself. But in many cases, statistically, the period before is much more interesting. Yeah, and this is also the case in Olympics. Yeah.
What I find is really kind of even more fascinating is what you uncovered post-event. So what you wrote about was that while the games are on or up to the point of it, and maybe even before there's even a knowledge of this, there's a lot of infrastructure building going on, and tourist bookings are happening. People are happier, like maybe in the Christmas spirit, per se, because they have this event, increased consumption. But afterwards, after the games are over, prices usually fall, you say, because workers are less efficient, and there's a loss of all this capacity utilization. I guess there's a little bit of depression sets in.
I would say, once again, that events typically causes the stock market to rise ahead. Yeah, this is one general topic. And if you have it, for instance, in elections, in Germany, you can see it. In front of German elections, the stock market rises, and immediately after it drops. You see this in the sport event. You see it in FOMC meeting where 2 days ahead of the FOMC meeting, we have a huge outperformance. We have about 0.4 something in average for these 2 days. And then when the FOMC meeting makes its saying, let's say the rates are unchanged or whatever, already nothing happens in average. Yeah. And we have this also, in my opinion, for the same reason in the sport event. That means that months ahead, the people are considering to buy the stocks in the market where the sport event takes place. We have already a rising recognition in the media, yeah? And then it continues. We have investments. We have whatever in these countries, and the stocks are rising accordingly, and they're rising in front of this event. And then at the time when this event takes place, the people are taking profit and so on. So then usually the story is already gone. Yeah? So you must really be ahead. That's a very big topic to benefit from these patterns.
And the other one that was, I think, also very interesting. I think maybe people somewhat can see this is the turn of the month effect. You saw this in 11 different countries from Canada, China, France, Germany, Hong Kong, India, Japan, Korea, Taiwan, the UK, and the USA. I'll actually put this table on the show notes for this episode, number 558, as well as we'll put all the information on how to get in touch with in the free newsletter that Dimitri puts out. But this turn of the month effect, explain that to me.
Okay, this is now not an event effect; it's a normal calendarian effect, and it simply says, and in US it's quite maybe not well known, but there are several research papers about this effect. That means simply that the stock market typically rises some days ahead of the turn of the month until some days after the turn of the month. This is statistically proven since I did it 2019-28. Yeah.
Oh, wow.
So you have more performance over this period at the turn of the month than around the middle of the month, despite the turn of the month period is shorter. Yeah? But in the US, this effect came, disappeared, came again, and in recent years, more or less, it was not so significant than it was historically. And what I did this approach. I checked how is this turn of the month effect, which is known in literature a lot for the US market and other countries. And I coded the performance from the 26th of each month until the 5th of the month, of the next month, so of the turn of the month, and the other period, that means from the 6th to the 25th. Yeah? And I found out that in all countries, there is this turn of the month effect, and it's even in all countries stronger in the period which I researched since 1970 than in the US market. Yeah, for instance, in Korea, in the mid of the month you lose, and at the turn of the month period you gain a lot. And the difference is almost 16%. And
I guess
average return, annualized return.
Begs the question of why.
The question of why is because the money flows are typically around the turn of the month. Most people earn their income at the turn of the month. If you rent a house, you usually get it at the turn of the month. So the investment streams comes at the turn of the month. This is obviously internationally the case. So this is a quite grounded seasonal pattern. Yeah, it has a very stable and good reason.
So what would you do as an investor with that information?
If you invested in this pattern, you have different possibilities. First, you can simply trade it. Go long a few days before and then you cancel it. You can make your timing. If you want to buy a stock, don't buy it after the turn of the month. Just buy it before, and you get this difference in average. Yeah,
interesting.
There are different possibilities how to trade.
Right.
Or what sometimes makes sense is to combine it statistically with other things you are usually using. Yeah.
So I assume
this
that
is also possible.
Right. So I assume that in theory, that would mean that the potential for a month-end rally at the 26th into the end of the year on Christmas time, you combine those two together, that could be a much more powerful structure.
Yeah. You can combine also things which any trader usually has some trading approach. Yeah. Let's say he is following the market. If he makes timing, not every investor makes timing. Let's say he is long when the earnings are rising or the rates are falling or. And he could combine this with a seasonal pattern. Let's say if the good seasons, in the winter half of the year, this is one additional factor. Yeah, this is also a kind of approach. And then summer year, he reduces his exposure. Yeah, this is also a possible approach.
Right.
Yeah?
Fascinating.
So there are many possibilities how to use it.
So I'm sure you're always looking for and on the hunt to find what's the next great pattern. What's the next great seasonal trend that could be playing out, right?
I'm from research here. I'm always looking for new pattern, to be honest, because I'm quite interested to find something. From the many patterns that I found, realistically, I cannot trade all of that. That's simply not possible for one person. Yeah, but I'm using it to use this statistical outperformance in a statistical sense to that the investment gets a higher probability to gain. This is my idea, my general idea with these concepts.
Yeah, it makes sense.
And I offer this also to currently only to first this free newsletter, which I can recommend only, which everybody can get. Then I have this app in Bloomberg and Thomson Reuters called SeasonX, where everybody can make event studies and seasonal studies for all instruments which are available in these professional terminals. And in some 1 or 2 months I will also have a website where at least seasonal patterns are available for the public.
Good stuff.
And seasonx.com.
Good stuff. Yeah? Good stuff. Fascinating information. Yeah. Fascinating. Always looking for, I mean, listen, investors always looking for an edge, looking for the opportunity to just squeak out a little better trading opportunity and to keep them on the right side of the trade. So there's definitely something very interesting. I encourage